Hello, everyone. It's Sunday, and you know what that means. Another portfolio update. Now, my portfolio has gone up from last week. It is now worth $25,521.35. I've put another $500 into the Chase account. So I'm going to go over everything that I currently own, why I own it, how it's performed so far, whether I'm going to be adding or subtracting, or what moves I'm going to be making just in general in the account, and kind of give my thoughts on each individual stock and the overall portfolio as a whole. If you're new to the channel, please hit the subscribe button. Check out some of my stock analysis videos if you'd like. And without further ado, let's kind of get into the positions. First off, we have the Chase account. This is the only active account that I will put money into. I also have the Webull account, which I'm going to go over, but that account is just the positions that's in there, and it's not going to change at all. I just collect the dividends out of it. The Chase account, though, is worth $18,101.59. On an unrealized basis, I am now down $1,581.98. This is a little bit of a misleading number because it does not include the gains I've gotten from dividends reinvested, and I currently have an estimated annual income of $553.56 in annual dividends that I am receiving from this account. The lowest value position in this account is TXRH, or Texas Roadhouse Inc. I'm currently down $36.25, or 6.02%, and the value is $566.14. I did put $600 into this stock, so I've earned $2.39 in dividends, and overall, I still think that Texas Roadhouse is going to perform very well into the future. My main reason for owning this stock is that I think that it's going to get to the level that a lot of other big chains are at. I think that there's still a lot more places that Texas Roadhouse restaurants can be added to. I think that there's just a lot of growth in this company. It doesn't have the kind of problems that McDonald's or other big chains have where they can't open new restaurants and they're going to have difficulty making more money. I think that this restaurant is one of those up-and-comer restaurants that a lot of people really love, and I think that there's going to be more franchisees, and corporate is going to be able to open more restaurants. It just seems like there's a lot more possibilities for positives with this company, and that there's still a lot of places for them to be able to open new restaurants and make more money. Next up, I have Prologis, ticker symbol PLD. I'm down $92.94 on this stock, or 9.26%. The current value is $910.99. I've put about $1,000 into this stock. So it's paid me $3.93 in dividends. This is a triple net real estate investment trust that specializes in warehouse logistics real estate. So that essentially means that with the triple net component of this real estate investment trust, that they do not pay any of the costs associated with any of their properties. That falls on the person leasing the properties, and Prologis is able to just either collect the rent or resell the warehouses once they're worth more. These are also longer leases, so it's more secure. And I really think that this is kind of a side play into AI and just growing industries. I think that there's going to be a higher demand for warehouses just in general as more advanced logistical networks get built up across the United States. And overall, I think that this is just a very safe play because they're not really putting a lot of money back into the warehouses, or any money at all. If there's an improvement, the tenant has to do that. It also pays a very good, solid dividend. I've done a lot of DCF models on this stock, and I value it around 118, but of course, the tariffs have kind of hurt this, and that's a little bit more up in the air. But I think that holding this long term is a smart play because it's going to continue to pay a very solid dividend, and I think that they're going to be able to continue to perform at a very high level. Next up, I have Meta, ticker symbol Meta. I'm down $144.52 on this stock, or 11.73%. The current value is $1,088.05. And I think that Meta is very cheap from a DCF perspective and overall as a company. I really like to have companies that are very monopolistic, and I think that Meta is the definition of a monopolistic company because there aren't really a lot of other social media companies that have this much pull or this much power in the space. I think that with AI getting better, they don't even necessarily need to be the main winner in AI because they could charge other companies to use their data sets, which are going to be very valuable. I think that they can also make more money once the AI gets better at recommending certain ads to people. Because obviously ads are a huge part of their business, really arguably the main part of their business. So if companies are wanting to advertise on Meta and they make the technology to advertise to specific people better, I think that Meta is going to be a top stock into the future. So I'm still holding this. I might buy more of it. I just need to obviously get more money to throw into it. But I really think that Meta is a very good play overall. Next up, I have Waste Management, ticker symbol WM. I'm currently up $134.38 or 10.75%. This is the only stock year to date that I'm up on. The current value is $1,384.60. I have thought about actually adding more to this position simply because it's so well protected from everything. And I obviously have a very long-term perspective, so even if I'm paying a little bit of a premium for this stock, I think that it's worth it if I'm planning to hold it for at least 5 years, which I am. I was really buying this stock too when we were in a big bull market and everyone was going for tech. I think that it was a mistake not to have bought more of this stock when it seemed like every other stock was going so crazy, because it really is a defensive stock. And when an event like the tariff event happens, or 2008, or whatever black swan event that really hits the market and drops it, Waste Management is a very good preserver of wealth, and it's very good at increasing the amount of cash flow that it makes every single year. They've had good organic growth year over year, and they've used their spare money to buy out other waste management type of companies so that they can even make more cash flow. And overall, I think that this business is very safe because even if there's a recession, people are not going to be skimping on paying for their waste disposal services. Next up, we have Energy Transfer, ticker symbol ET. And I have more of this in the Webull account. That's kind of the main position in the Webull account, but I'll talk about it right here. I'm currently down $290.50 or 14.98%. I finally got it so that in this account I have a little over 100 shares, which I think will just make it easier to calculate all the dividends, obviously, and I just like that kind of just round number while the stock was so beat up because I was able to buy more for less. If you're not aware of what this company does, they own pipeline infrastructure and they charge a toll for moving natural gas. Now, there is a lot of concern with the tariffs with Canada that this stock could get very negatively affected, but I've held this stock for a very long time in the Webull portfolio, and just overall, I think that this is a very strong company. I think that it is very inflation proof. It does have some exposure to just kind of traditional petroleum manufacturers because they do own 49% of Sunoco. So there is that kind of risk with oil prices. But overall, I think that energy demand is going to increase with new AI and with new infrastructure within the country. So I think that this stock is actually going to be a winner in the very long term. And my main thesis for the stock being a winner and just overall for this stock is that if there's increased energy demand, this stock is going to be worth more money. And like I said before, it is inflation proof because whatever you're paying for the pipelines is the exact amount in the year that you bought them. And I think that this stock is a very intelligent long-term buy. It has around an 8% annual dividend, which I also really enjoy because when it goes down like it has now, I'm able to reinvest those dividends back into the company and get a higher dividend yield over time as it reinvests into more fractional or full shares that are going to pay me even more. Next up, I have ticker symbol AXP, or American Express Company. I'm currently down $144.63, or 7.58%, and I have $1,764 worth. This has been the stock that I've probably added the most to, other than the next two stocks, simply because I think that it's a very safe, reliable bet. If you look at their revenue over time, it's just increased every year. I think that this is a very great example of a company with network effects, very reliable company. Sometimes when there's recession types of years, it does get hit very hard. But luckily for me, I'm not trading based on monthly performance. I'm trading based on many years averaged out. So American Express is the type of company that I want to own for a very long period of time. And I think that this is a great time to get into American Express because if you can hold it for the long term, you're getting an okay dividend, but you're also getting just an amazing company that seems very safe to me and seems very reliable in its ability to grow, even though it's a mature company. And I think that that's worth a premium. But when I did a DCF on American Express, it looked like it was trading at a very deep discount. And I think that this would be a very interesting company to do another stock analysis video on. So stay tuned for that. Next up, I have Amazon, ticker symbol AMZN. I'm currently down 11.29% on this stock, or $304.81. My position is currently worth $2,395.16. I really love Amazon. I think that you could either buy Amazon or Microsoft as your Mag 7 stocks that are going to perform the best, in my opinion, simply because they have the cash cow business. In Microsoft's case, it's the operating system and Office, which is obviously better margin, but Amazon's logistical network, I think, is more valuable. And Amazon is not afraid to use their cash flow to buy different types of businesses to enter into and really take some big risks to try and make more money for the shareholders. And I think that that's very intelligent. When you're as big of a company as Amazon, you need to be taking risks. That's actually the reason why I have not invested into Apple at all. I think that Amazon is an amazing company that should be worth a lot more money, simply because I think that the potential is so big. So many different things are being built off of AWS as well. I think that their streaming is also very strong. I think that they're very intelligent with what they're doing. For example, buying Whole Foods. That's a whole nother segment that they're making more revenue off of. And as long as they keep doing these things that add more shareholder equity, I think that Amazon is an amazing company that I want to hold for the very long term, because nearly everyone I know also has an Amazon membership. People are very happy with Amazon. It's an amazing service, and it's the only company of its type in the entire United States. And I think that it's going to continue to grow. I think it's going to continue to integrate into our lives in different, very strategic ways, because I think that they're very smart about how they're positioning themselves and the types of things that they're doing. And I think that it's a very good time to be getting into this stock. Next up, we have Salesforce, ticker symbol CRM. I'm down 18.06% on this stock, or $616.60. The current value of my Salesforce position is $2,797.54. I know that it looks very bad, but I'm actually very, very happy when my stocks get tanked like this. And that's evidenced by the fact that I have bought more and more Salesforce. I think that Salesforce is an excellent position. I'm going to be adding more to this simply because they have probably the best example of network effects. So if you don't know, they are a customer relations management technology company, And how it works essentially is they'll store all of the information on customers for another company. So when people get into it, it's basically impossible for a company to leave once they're in. And as the company grows, they're obviously giving more of their money to Salesforce to perform their tasks. It's cheaper than the actual company doing it themselves. And the other thing is, as they get money from people entering in, they're able to improve the product, which causes more companies to want to come in, and they're able to tailor their product for more companies to want to come in. So fundamentally, I think as a business, Salesforce is extremely strong, and I think that it's going to be very competitive going into the future. Now, last up, and the biggest position in the Chase account is Vici Properties, ticker symbol Vici. I'm currently down 1.53% or $86.11, but that's actually misleading because the dividend's very high, and I've put $5,500 into this stock, and the current value is $5,546.15. So I'm up about $46, but it basically could be as 0%. I think that this stock is going to perform very well into the future, and it is extremely safe. If you guys don't know, this is also a triple net real estate company, but they own the most properties on the Las Vegas Strip, and I think that this is an invaluable type of company. I don't think that we're going to have another city like Las Vegas pretty much ever. It would take an insane amount of time to build. But what you need to know about Vici is that you don't have any of the risk of the casinos. They just own the physical building. So they don't profit off of the actual gambling happening. They just collect the rent from the actual operators. So Vici is extremely safe because as long as their tenants can afford to pay rent, they're making the expected amount of money that's agreed upon in advance, and they're able to give shareholders like me a over 5% annual dividend, which I reinvest back into Vici stock, and over time that money is going to end up paying me a higher and higher yield. So I bought $500 more of this stock last week because it was below $30, and for me, I think that the stock is worth around 32 to 34, but I like to buy it when I know it's at a very cheap price. And so under $30 is my kind of point where I'm very happy buying into this stock, because I think that over time, they're going to continue to generate more cash flow. And the reason for that is as they collect the rent, they pay 75% of the net income in a dividend. And then the other 25%, they're free to find other properties, which will increase the cash flow even more. They don't really have any expenses other than their debt expenses because they're not having to maintain the properties. That's up to whoever is renting from them. So I think that this is a no-brainer, very good type of long-term stock that will pay insane dividends into the future. Now looking at the Webull account, I'm down $1,136 year to date. I am up something like $11,000 for the maximum amount of time. And the reason for that is just simply that at one point I had $42,000 in this account. I think now I'm around $7,000 something. So these are the three stocks that I have in there. I have DraftKings, very small position, down 13%. This was from when I was trading options on it. I was selling puts, and then if I got assigned, I would turn around and sell calls with my 100 shares. So I don't really recommend doing that type of trading, but I kept a little bit of the profit in there just so that I'd always have a tiny bit of DraftKings, and then I kept the other half in cash. I also have 5 shares of Microsoft, which I've kept in here for a very long time. I'm down 8.11% on that, or $171.35. This pays me about $5 a quarter, which doesn't really affect anything, but I just wanted to have some exposure to Microsoft in case the stock does something crazy. And then the rest is all in Energy Transfer. So I have 328 shares. I'm up obviously 38.91%. I've been up a lot more in the past, but I don't trade these shares at all. I just collect the dividend. And this does pay a whopping $106.60 a quarter in dividends that I can bring back to the Chase account. And then I can buy more Energy Transfer in the Chase account, or I can buy something else that I think is cheap, or I can just keep the $106. That's kind of a recap of all of my positions. Obviously, I've had a better week from last week with Trump kind of doing an about face about a lot of the tariffs and pausing them. That's really helped my portfolio overall. I'm hoping that all the tariffs just get dropped because this has been an absolute bloodbath, and I've had the opportunity to buy up a lot of the stocks that I like that I can hold into the future. I would urge everyone to keep very calm. I think that everything's going to end up okay eventually, but I do think that these types of events happen, and they're a test for people on whether or not they have the patience to be an investor. So that's kind of what I'll say about this whole situation as a whole. I think that it's the wrong strategic plan, but I think if you're a long-term investor, you'll be okay, okay? I think that you just need to stay calm, get into companies that you really like, that you believe are cheap right now, and just hold them for the very long term. Thank you guys so much for watching. Please subscribe to the channel if you liked the video, and check out some of my other videos. I really appreciate all you guys being here. Have a great day. Bye.